All right, welcome everybody. I'm Pat Whalen. I work for the Niagara Global Tourism Institute, which is part of Niagara University, and we're the operators of this space. For those of you who haven't been here before, this space is dedicated to entrepreneurs. So people that are starting a business can pay us $100 a month, and they can come in here and sit wherever they want, 24 hours a day, 7 days a week, have a place to work. As Roscoe says, I don't see Roscoe right now, but Roscoe says we always have coffee. 24 hours a day, 7 days a week, Starbucks coffee. Drink your weight in coffee every day if you like for $100 a month. And we have members here, believe me, we're losing money on them. But seriously, we have a lease with F-Bites Cafe. They operate the cafe over here, and that's part of their lease, is to have coffee here 24 hours a day, 7 days a week. So they're losing money on our members, not us. We also have awesome Wi-Fi, and again, you can sit anywhere you like when you come in here. The place is pretty big. There's 6 properties that we blew a hole through the walls of the sides of all these buildings and made it one big space. So there's a lot of varied spaces, all different sizes and shapes, and we have conference rooms and a big part of the space for us was where we're all sitting and standing right now. This was a vacant lot, was never developed. These 2 buildings were abandoned for 10 years. Those 3 buildings were abandoned for 25 years. We restored the buildings, obviously, but we built this out of a vacant lot so that we could do events like this. This is exactly why we wanted this space here in the middle. So we're glad you're all here tonight. And I'm going to start out, I'll turn it over to Annette in a minute to introduce her team members. But I'm just going to tell you a little of my own story. It's a long time ago. Things changed in the world since I started one of my first businesses. But one thing hasn't changed, and that's you need money to start a business at some point in time. You may be able to start it without any money or not much money, but sooner or later you need money. And when I started my business, I was working for UPS, and I had been there for 13 years. I had a really good job, so I had a really good credit rating. So I kept getting offers in the mail from banks to get a credit card account. And I knew in a year I was going to be leaving and starting my own business. So for a year I said yes to all these credit card offers. And when I finally quit my job at UPS, I had a stack of credit cards about this big. I had 50 credit cards. And myself and my family lived off those credit cards for over 2 years. That's not the way to do it. So most of what I do here is tell people what not to do. I really don't know what to do, but I know what not to do because I made about every mistake you could make. And that was one of them. So I'll leave it to the bankers to tell all of you what I should have done. But I think it's really explains part of the problem. And the number one question we get in this space from people starting businesses is, how do I get a loan or how do I get money? And contrary to what a lot of people think, no, you can't get a grant to start a business. You have to figure out how you're going to finance the business yourself somehow, some way, either through your savings or getting a loan or a rich uncle or somehow, some way get some money. And most likely, most small businesses at some point in time are going to need a loan. And therefore, they're going to have to go to one of these people here up here to talk about how to get a loan. So I let them talk about this, but the way to start thinking about that is before you need the loan. And now I'm going to turn it over to Annette and ask her to introduce our guests here, and thank you all for coming. I appreciate it. Take it away.
Thank you. Thank you, everyone, for coming.
By the way, they're all vaccinated up here.
Yes.
Appreciate you all keeping your masks on, but so that you can hear these people. We're not making them keep their masks on, but don't worry, they're all vaccinated. I checked.
Thank you. And thank you, everyone, for coming. It means a lot for you to come out here, and by coming, we know that it means a lot for us to help you. This is Tom Ivanek. He is one of our commercial, did I say your last name wrong?
Ivansik.
Ivansik. I always say it wrong. Jeff Sentif and Kelly Nava. We all work at Bank on Buffalo in Niagara Falls. and it's a small community bank that opened up about 3 years ago. Our parent bank is called a CNB Bank, and it's out of Clearfield, Pennsylvania. So it's a small bank, small community bank, but it has the big bank that's backing us behind it, backing us. So my role at the bank is I'm the branch manager of the Niagara Falls branch. So if you were to come into the bank, I'd probably be one of the first people that you see. But then I'll let Tom tell you a little bit about what he does.
Sure. So I'm on the commercial lending team, which involves loans to businesses as well as commercial real estate lending. And again, that's where I fit in the pieces on the credit side of things, specifically for lending. I'm out of the electric tower downtown, but handle a lot of the branches in the area. So that's where Annette and I partner up. She takes care of most of the day-to-day, and then I take care of the lending side of things.
Hi everybody, I'm Jeff Sentif. Similar to Tom, I sit on the commercial lending side. I actually sit right next to Tom downtown at the electric tower. I've been in banking for almost my entire adult life. So 2003 I got into banking 18 years ago, and I've done a variety of different things. So I've done mortgage lending. I was a branch person. I was a branch manager for a long time, and then also on the commercial side. I also teach entrepreneurship at Erie Community College. So I've been doing that for 2.5 years at this point, minus take away some COVID time there, but 2.5 years of that. So talk to a lot of folks like yourselves that may either be newer business owners or looking to do some startup, and that's my role.
Hi everybody, I'm Kelly Nava, and I also work on Bank on Buffalo, and I actually started with the bank together 4 years ago. I've been in banking for about 20 years, and I do commercial cash management. So what that means is basically once you open up your business depository account, I kind of help you with that. I'll help you structure it, I'll help you get yourself set up so that you can do a lot of your payments online and kind of try and make your day-to-day banking as efficient as possible. And if you don't have time or resources to go to a brick and mortar branch every day, I would be the one to kind of step in and help you get set up so that you can do a lot of this day-to-day stuff, payables and receivables, through online banking or through added services, so that you can spend your day focusing more on your business. So, and I will be leaving a little bit early tonight, so if you see me get up and step out.
She's not unhappy.
Yes.
Great. Well, the thing that I would want to start out with first is my role as the branch manager. Why we're talking, we want you to put your hand up, ask questions, because we're here because of you and what questions you may have for us. So at any given moment, I want you to feel comfortable with asking us questions. No bad questions, no questions that are off limits. That we want to be honest and open with you about how we might be able to help you or what are things that we can do for you. So the role as a branch manager, you might think it just runs the day-to-day branch, but I would encourage each one of you to find a branch manager that can help and guide you through your business, the years of your business, because we really can help you day-to-day on what you might need and what you don't need. When you think about a plumber, I wouldn't do my own plumbing. Why would I figure out how to do my own, why would a plumber figure out, we want to help them do their banking. Do what you're good at. So there's a lot of things that we can do in the branch to keep you on track on a day-to-day basis, whether it's your accounts, whether it's, your online banking, your, staffing with helping them get their accounts open, whatever you may need, we're there. And you need to build a relationship with a good branch manager. Wherever your branch is, make sure you know that manager. And she knows you, she sees you coming in, she sees what your transactions are going through your account are like. If you're getting overdrafts on your account, can she help you manage that money day to day? So that the manager is the most important piece, or an assistant branch manager, someone strong in that branch. So that's one of the things that I think that we can help our small businesses with. That's one of the things I do. So
yeah. And when we get a request for lending with Jeff and I that comes in, if there's an existing relationship, that's where we're going to go to Annette. Hey Annette, do you know this person? Do you know this business? What's the history? Give me some background. And if you've established that relationship where you know them, they know your goals, they know what you're aiming for, they can help have that conversation with me so that I know what I'm walking into, looking at that request, that side of things.
Tell the story. How I can help. Your branch manager can help tell your story, why and what you need and how come. So that's one of the most important pieces.
And that's why it's key, again, with Annette, is establishing that relationship so that she knows who you are. She knows, again, the goals, what you're trying to accomplish. You should have a banker that you know and that knows you. That it's not sort of just, oh, yeah, I have a bank. There's some people there. I go in and ask a thing or two, but they don't know anything about me. You want to build that relationship where your banker knows you and you know your banker, and you can name them. You can say, my banker is Annette. That makes a huge difference as compared to sort of, my bank is, name any generic big bank. Your banker should be a person, someone you know and that knows you.
Does anybody have any questions or any thoughts on that? Anybody? Does anybody have a relationship with a bank or a time that they've maybe had a bad experience with a branch manager that wouldn't help them? I'm sure that might have happened too. Yeah.
I've had good relationships with a couple of banks. Sometimes they help me out by waiving certain fees, but I think that's where the line stops, because they're bound by certain, FICO scores. And if the FICO score is at a certain level, there's nothing that the bank can do for you.
Well, and that's something else a branch manager should do with you is, look at your credit report and say, why is your FICO score low? What can you do within your credit report to start bringing your credit up? If you have a $100,000 revolving line of credit and you're at 100% of that, it's going to drive your score down, 35 points just out of the gate. So by paying that down or maybe terming that loan out, that might be an opportunity for you to get a higher credit score. Are there things on your credit report that you can dispute? So that would be part of your relationship with your branch manager. Where and what can they do to help you, build a stronger credit report.
And that's where I would say, again, that's, I think, the differentiator. Someone saying, no, this credit score won't work, end of conversation, versus somebody that sits down and goes through your credit report with you and says, okay, why is this the way it is? Are there factors that can be changed, either quickly or others that will build over time to get that score? That score is going to be a factor in almost any lending decision. But having, again, that relationship where you have a banker that can look at your report and why, and give you some guidance, I think that's a big differentiator.
I think sometimes too those credit reports look so mysterious when you look at them and you're like, what the heck is this? And I'll never forget, when I was just out of college and trying to get a car loan and looking at my credit report and being genuinely confused by just the volume of information that was on there, right? So, find somebody that can help you read that report, dissect it, simplify it, because there are things on those credit reports. And I could tell you, if I pulled mine today, I could find multiple things that I could, improve on, dispute, whatever, get removed to, improve that score, because, it's not going away, but there's definitely some things that you can do to help drive that score up, and having somebody who knows a little bit about it in your corner is going to definitely be helpful.
It's funny, I'll tell you a quick story. My husband and I bought some furniture at Raymore and Flanagan, and when we went in, they said, well, 0 credit for 2 years. It was 0 interest for 2 years. I'm like, cool, why wouldn't we do it? So we did. He signed the paperwork. So when we pulled his credit report for something we were doing later, I'm like, $30,000 line of credit, what? What's this? Well, yeah, they signed us up for a $30,000 line of credit, and we never closed it. We paid the furniture off before the time that the interest would start to tick. But he had that. He had a John Deere riding mower, this, and he, wow, I didn't know by keeping those all open, and when you sign those, that your score is going to go down. So
it's very, can be very overwhelming and confusing. So, definitely, I think now you can get a free credit report pulled.
Yeah, you can.
You're entitled to that, you know, and that would be, I think, just a great first step.
I think we had a couple.
clean it up.
No,
Yeah.
I'm telling you, you get one free credit for every,
Yeah.
from each,
Yep.
each agency.
Yeah, Raymore Credit Union did the same thing with me. I paid it off, but they just kept adding, credit. So how do we?
You gotta close that. You gotta close that.
It messes up your score.
Well, it
No.
does temporarily. Go ahead.
Well, it doesn't necessarily mess it up. So I think one thing is it does help to have long, good credit that's been out there for a long time that is good, you know, multiple years, you've paid it on time, that's definitely something that's good. But there's also having too much credit can be bad. You know, if you have a lot of credit, if you have higher balances, that can be looked at as bad and it can negatively impact you as
So
well.
how do you cut down some of the credit though? Like, cause all of my credit cards is paid in full, but
Yeah.
I want to get rid of some of them because like the guy that said, I don't know, when I got a house, I just went credit card crazy in case something happened later on.
Right.
Now
I think mostly it's optimal, and you may want to jump in. It's probably mostly optimal if you have two long-standing credit cards that have good, solid payment history, that have, from a balance standpoint, usually want to be 35% or less of the credit limit. So if you have like a $10,000, just for even numbers, $10,000 credit card, you want to be at $3,500 or less. And the tricky part there is the balance is just a snapshot of one day in time. It's whenever if it's a Visa, whenever the Visa cycles, it could be like the 13th of the month, and you know your balance might be $5,500 that day, but you could pay it the next day and it goes down. So try to stay at that 35% or less on a monthly basis. I would say 2, and you may have a different
Two's
thought.
good.
2 is good.
No one needs more than that.
So how did you determine which ones to get rid of?
Like he said, I would take the oldest ones. Oh, well, you have to look at the whole picture.
Okay.
Which one's the lowest interest rate?
Your
Which one did
interest
you
rate
make-
is going to be a big factor
You
then,
know.
Okay.
for sure. Because, you know, some of those private cards, those store cards, Target cards, things like that, those rates are very, very high. You know, trim those down, and, you know, my rule of thumb is, like you said, 1 or 2 cards, but, you know, your main card that you're using has got a competitive rate. You're not paying 15, 20, 22, 24%. That's not going to help you in the long run, for sure.
And I say, if you go into any store and they say, you're gonna get 10% off
Yeah.
if you get a credit card.
Decline. Just say
No.
no.
No. I know I say to my wife, bad credit.
Can you tell my wife this?
Yeah. Because
This will be recorded. I've told my wife. I've had to have that conversation. What are you doing? Well, I got 10% off.
I'm so tempted, but I'm like, no, I have one card, I'm just going to use
You're
one
gonna save
card.
$30,
I
yeah.
have a question.
Yeah.
What is the minimum requirement for approval for business finance?
Good question.
That's a great question.
You want to take that?
I think it does. It's going to vary from bank to bank, and it'll vary on the situation. But you want to be in the upper 600s.
With Bank of Buffalo, we want to know what Bank of Buffalo do.
Yes, I think upper 600s is where you want to be. If there's a little bit of wiggle room. I think with us, it's not so black and white. You might go to a bigger bank and they have a credit policy. Every bank is going to have their own credit policy, so they'll be more black and white. Where they'll say 680 or whatever that number is. With us, if we can tell a story, we have a little bit of wiggle room. So we may say, hey, we want it to be above 660, but if we're at 630 and we have reasons for this, and that, we look at the credit report and we say, okay, look, I've got a judgment for a medical bill for $50 from 2 years ago that's really killing the credit report, but everything else looks good. We can overcome that. I think maybe there might be a follow-up question. It looked like you were gonna.
Yeah, but like, say for example, you were plus 700 plus. You know what I mean? You've been in business a couple of years, but you have credit cards, but then you have higher balances on your credit cards. Your debt to income ratio.
Yeah, debt to income is
Another
going to
factor.
come into it. It's another factor. It
How
is.
does that?
That's one of the things that we'll look at. So that's your debt to income ratio will factor in, and that's something that if you're in business for a couple of years, you have good credit, you're making some money, that will factor into how much more you can borrow. But if you have higher balances on your credit cards, as Kelly mentioned earlier, you could look to term that out, do a term loan, and pay that off. That may help you. and get rid of some of the credit card debt too.
Yeah. And I think some of this, it's important to think, is not, it's not I'm going to go ask a question and this banker is going to click a button and it's going to do the thing I want, whatever that may be. Parts of this are the longer term strategy of saying, listen, we can't do this today because of X, Y, and Z, but we'll make these changes, and in 12 months, that's a different story. And so it's again, I think it's important to have a banker that's making that strategy for you, not just saying yes, no on a loan today. You know, that's one piece, but again, maybe it's close enough. Maybe you've got the story, and we say, all right, this piece and this piece are changing. You're continuing to build history with the bank, and the deposit accounts are handled as agreed. A part of thinking about it is, as a lender, I'm making a case internally. The more ammo you give me, the more I can use. And so when I've got, okay, Annette says, you know, he's been banking with her for a long time, never overdraws the accounts, everything else is handled as agreed, he's growing and got his plans and whatever he or she may be doing, you know, that just gives more ammo for me to make the case to get it approved. So again, it's a longer term thing than, again, I think you should be aiming for than a yes, no today. If I go talk to 6 banks, will one of them say yes today? You know, you kind of want, which one's going to get me to the point where it is a yes?
I got one more question, I'm sorry. However, say for example, like you say, it's a startup business and they're trying to get funding for their business, right? And I know a lot of banks require them to probably establish a relationship for a certain period of time before they want to extend any type of funding. How does that work with Bankable Buffalo? For a company that's really needing financing, but they haven't been in business long enough, they don't have their business account set up long enough with that particular institution, how does that work?
Yeah, lending to any true startup, saying, hey, I'm starting this business and I want to take a loan out to get it going, is incredibly challenging for any bank, anywhere. Just because the number of startups that don't end up making it is really high. So seeing that history, and that's where, again, I'm going to keep coming back. I want to sound like a broken record. It's a longer term strategy. Can I get, you know, when was it established in business? You know, can we build the timeline there? Can we start planning for you? Again, most banks, rule of thumb, are looking for 2 years in business. So, okay, how do we start planning for that on that day when we hit 2 years, we've got all of the support and backup to be ready to pull the trigger right on that day.
Now, even taking it a step further back though, I think you need to think about this also as before you start up the business. So before you start the business, when's the right time to really do that? And it's different for everybody, it's different for every business. But everybody here has an idea or a thought, or maybe already has a business. But whether or not you act on it, or the time frame of when you act on it, is very important depending on your individual situation. And just jumping in with 50 credit cards maybe worked, but a lot of times that doesn't work, and that can have long-term impacts that really, really, really could go wrong. There are, I think, having that conversation with your banker ahead of time. Hey, I am looking to do this. Here's my thought. Here's my plan. Here's my current situation. How do I get there? What are the, you know, what can I do to put myself in a position to be successful? And that's really when you want to start having your conversation with the bank and the banker that you ultimately want to deal with.
Yeah, I know, right? Well, it's funny because I just did a loan for someone, and they came in and they're starting a restaurant, and it's actually going to be opening in not too long, and they wanted some cash, but we couldn't do it. It's a startup, you know. And we always think about skin in the game. But what I did do for him is we did a home equity for him. So we were able to put a lien on his house to get him some cash out. So if you said, I got a car, it's paid for, you know, can I do a loan on your car? Yeah, let's do an auto. You know, if you don't have any debt on your car or another piece of property, or, you know, sometimes we can think of creative ways to get financing, not necessarily on your business, but on the personal side. Because even when you're going to do a business loan, you're going to still personally guarantee it.
But you do still have to qualify for that loan. So from a timing perspective,
Right.
you have to, if you quit your job and you start a business and then you want to do a home equity line,
It's not going to work.
it's not going to work.
Right.
That's why you want to talk to your banker ahead of time, because you're not going to qualify. But if you get the home equity, the bank can show that you have enough income, then you can start to have that conversation. Maybe that's the right time to do it. You have that security blanket there in place that you can draw off of when you truly need it as you start to, start your business.
Good
Yes.
questions.
Okay, I got a couple of questions.
Can I ask one question?
Oh,
How do you address a situation where a person has no credit?
I have an answer for that. So you find your mom, your dad, your best friend. If you have never had credit before, my son didn't have any credit, so I got a joint $500 credit card. Now he has my credit score. So that's one easy way that but the person I had to say I'm going to take the risk and give my son a $500 credit card. That's one way of helping establish credit.
So
can also do a
find a
security.
strong co-borrower to help you.
Or you be an authorized user on someone's account.
Or
Yeah, that's also a great way to start building.
what did you say?
An authorized
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 user, which
user.
won't actually build credit on all cases.
What you can also do is a secured credit card. So a secured credit card is secured by deposit. So what that means is you take $500, you put it in a CD that we lock at the bank. We give you a credit card so you can use that. And we have the money locked, so we know until we get comfortable with it, it'll start building up a credit score for you, and then you can get a credit
So you
card.
basically pay yourself back.
So
You're
you have
paid.
those available at the bank, you can do that?
We do. But if you have judgments, liens, tax levies, you still won't get it because they have first rights to those funds. So, because that supersedes the bank.
Good point.
Yeah.
That's a good question, though.
That was a really
Yeah,
good
it's a
question.
good question. 'Cause you see a lot, again, kids coming out of college and they've never had a credit card and they, never had a car and, you've got to start somewhere, right? So it's usually mom and dad.
That's where most people start establishing credit, auto loans,
Yeah.
or, like you said, secure credit cards or store credit cards. Like that.
It's a lot of ways where you can establish your credit.
Absolutely.
But anyway, my name is Carolyn Wood. That is what I do. I do personal and business credit.
Okay.
There you go.
There are multiple ways if you don't have credit that you can establish credit outside of you, because some people are just not bankable. Okay. For those that aren't bankable, it's for you to do your due diligence to become bankable. Okay. There are many ways that you can establish your credit. I want to piggyback a little bit off of what you were saying as far as your credit score and your credit reports. There's a lot of people who don't know the difference between your personal credit and your business credit. They're two different things. Okay. Now, if you're going solely off your personal credit, then you may need to look at establishing some business credit for yourself, or if you're specifically talking about yourself.
I'm well familiar with that because I understand, it's the difference between Experian, Equifax, and TransUnion.
Right.
And then we got Dun & Bradstreet and all that kind of stuff. I'm familiar. But a lot of times what they were explaining, even if I do apply, I still have to use personal guarantee, so I'm still going to have to use my home credit, regardless if I have an established business paydex score or not. I'm still going to have my personal guarantee on it.
Yeah.
It
So I'm
depends
very
on where you're applying
well
for your
familiar with
funds.
that.
It depends on where you're applying for your
Yeah, because I didn't have vendor account,
Yeah.
trade lines, I do all that.
Ah, gotcha.
Gotcha.
I think you've been waiting back here patiently, so thanks.
Okay, thank you. So, for one, do you require the business plan? Well, should we have a business plan when we come here?
I would always advise that if you're starting a new business, or even if you're within a year or two, you should, as a best practice, have a business plan and revisit it on a regular basis. Are we going to need it on every case? No. Case by case basis, I think, is more appropriate.
And do y'all have foreclosures on properties in the area? Do y'all do foreclosures like the repo houses or?
So do you mean
We-
from
we
a
don't.
bank perspective? Yeah, actually you can't right now.
Yeah.
That
We don't
hasn't
right
been.
now.
Okay, and the next thing is, business credit. So do you help with nonprofits?
Yep.
Yep.
Okay.
Nonprofits are usually a little bit more challenging on the lending side because generally, as a nonprofit, they don't have an individual owner, and so there's not that personal guarantee. So it's riskier. So usually nonprofits, to do the lending side of things, have to have a long history and a really strong balance sheet of assets to rely on, because you're not going to have that personal guarantee.
Okay,
Usually.
So no startups with no.
They're very, very challenging. That's incredibly challenging.
Yeah, that would be tough,
It would be tough.
yeah.
What other questions?
Good questions.
Great questions.
Yeah.
Oh, and I meant to mention, there's resources that can help with a business plan out there. I'm forgetting some of the names. But
SCORE, there's the SBA at Buffalo State College that assists with it.
yeah, there's one in Niagara County.
There is.
SBDC.
Yeah, that might be it. Yeah.
SBDC, Small Business Development Center.
Yeah, the Small Business Development Center. Yeah. And they'll walk you through, they give you a template, they'll walk you through all the specifics and help guide you through that. And these are mostly free resources out there, so incredibly helpful.
I got SCORE, SBA, and Small Business.
Development
Center. Yeah, SBDC.
Thank you.
Yeah.
What other questions? You guys have had some really good questions.
So, if I have a decent credit score as an individual, but however, I don't want to I have to personally guarantee any business loan. So there's never a business loan based on your Duns and Bradstreet credit score versus your individual credit score. So is it always like you're always personally guaranteeing your loans as a business?
Yeah.
I mean, there's so it's never not. I wouldn't say never. I mean, there are some scenarios where if the business is strong enough and the balance sheet is strong enough and it's got a strong enough credit, strong enough history, that it wouldn't be either wouldn't be required, or we could do something where it runs off, and it may be like an initial personal guarantee, and then after every year maybe it's limited and it's only certain percentages is personally guaranteed.
Like a burn
So,
off,
yeah, it's a burn off. Yeah, those are things that happen. When a bank looks at an opportunity, they're going to risk rate it from a credit standpoint. We're going to look at it. You just evaluate the entire opportunity, and if there is no guarantee, it makes it a little bit riskier. So if there's no guarantee and the bank is willing to do it, typically there's going to be higher pricing involved, higher interest rate, because it is a little bit more risky.
What would be the high interest rate?
They change. Rates are, it depends on the product, but if we're talking like a term loan, high for us is probably in the 5s, right?
Yeah.
Which is still pretty reasonable.
Yeah.
Generally, if there's not a personal guarantee, it's a very established business. Because again, if you're thinking about my job, making the case internally to get it approved, and there's this big glaring, hey, no personal guarantee, how do you defend that? How do you, okay, if we're doing that, why? What are the mitigating factors? And if I can say long history, tons of profitability, lots of other assets in the business, if I have a case, then I can make that case. But again, it's really got to be strong, because that's a big weakness to a proposal. So usually, again, I would say 97% of the loans I do are personally guaranteed. And on the scoring side of things, again, we do a blended usually, where it's sort of both. We're looking at the business score and the individual score. And then again, usually the individual is guaranteeing it as well.
Hey, could you explain a little bit about like just regular business credit cards as opposed to business lines of credit?
So a business credit card generally operates just like a personal credit card, but it's used for the business. Typically, a line of credit doesn't have a card associated with it, and it is used more for working capital. So a typical scenario would be, I have 3 customers who all owe me, because I've given them whatever my product or service is. They each owe me $10,000. And they're not going to pay me, they said, for roughly 30 days, but it's due in 30 days. So now I've got 30 days where I'm short $30,000. And so a line of credit usually is used to bridge that gap. And so we would advance the 30,000 to let you keep running the business. And then when it comes in from those clients, that pays down the line of credit. So it's that timing.
Those type of scenarios, like you don't extend like lines of credit for whatever, whether it be for everyday operations or equipment purchases or whatever the case may be. Because I'm assuming like your line of credit is just there and you can use it.
Yeah.
And you only pay interest on whatever you use. So if
Right.
it's just
Correct.
sitting there, you got 10 grand in line of credit or whatever the case may be, you don't usually don't get charged interest, right?
Correct.
So you take 5 grand off of it and you just pay that.
Yep. And they're usually interest only. So your payment is based only on the interest that's due. And then, yeah, so I'm using that scenario there of, you know, the amount that's due from your clients. But yeah, it is generally just a working capital line of credit. It's used just to fund whatever the business's needs may be. Usually, you mentioned equipment loans. Usually those are term loans, which include principal and interest and are over a set period of time.
Yeah,
Kind of more like a car loan.
No, I wasn't talking about that. But I'm saying if you get a line of credit, can you use whatever you want as long as it's business oriented?
Yes.
Whether it be
Yes.
purchase of equipment, whether it be payroll or whatever the case.
Yeah.
You can. I think that you have to keep in mind if you're buying equipment, that's got a lifespan and it's got a value. So day one, let's say you buy a piece of equipment for $10,000, and it's like a car, like you said. You know, as you start to use it, the value of it all of a sudden it decreases, right? As you start to use it, and it may only last you for 3, 4, 5, 6 years. So, can you use a line of credit to buy equipment? Yes, but your banker would always typically advise you not to do that. A term loan would make more sense because you pay down that balance as the value of the equipment decreases, so that when you don't want to be in a situation where you still owe $8,000 on that piece of equipment that you're not using anymore, right?
Right.
Then, you know, you're
So that way it's built into the
short
loan,
stuff.
into the payment, so that it's automatically coming down. So you don't end up 3 years from now, I got this $8,000 loan and the equipment's not even used anymore.
I'm gonna skedaddle.
Gotta run.
Kelly has to go.
Bye.
Bye, guys.
Bye.
Thanks, Kelly.
Thanks, Kel.
Everybody, good luck with your business.
Anybody else? Questions?
Why would someone go to a bank instead of a small instead of the SBA if they're starting out?
Go ahead.
Sure, you want to take one?
You can go to the SBA can help you with resources. Now they do have some programs where the SBA does directly provide financing for, you know, with COVID and disaster relief. But to my knowledge, and correct me if I'm wrong, you need to, for an SBA loan, you need to go through a bank to.
So if you went to the SBA, they would probably say, hey, here's several banks we work with, and give you some options. Or you can go to a bank who partners with the SBA.
Right.
Generally, the way SBA loans are used is we will do a loan, the bank does a loan, and usually they're looking at a collateral shortfall. So there's not enough collateral to support it, so the SBA steps in and guarantees a portion of it. So it's an add-on to one of our loans, not sort of its own thing.
So you
If
still
that
need
makes
a
sense.
personally guaranteed SBA loan?
Correct.
Yep.
Correct, and actually sometimes more, because the
Sign life insurance.
Yeah, the SBA can take,
mortgages.
right.
Oh, I still, you still
Just
have
that-
to
yeah.
personally guarantee that.
Yeah, you do have to personally guarantee SBA loans, and again, sometimes they step in and take a second lien on your home, or an assignment of life insurance, or something else, because again, the reason the SBA is there is that there's not enough collateral in the business, and so they're trying to add the guarantee, but then take some extra collateral somewhere to sort of support
Well,
that.
SBA would probably be a lot easier for any startup company, but they just
Generally.
require a lot more.
Yes,
A lot more work.
it's a good way to put it. Yep.
Bank,
Yes.
Business plans and all that kind of stuff.
There's a lot more paperwork with SBA
That's all they
loans.
do is guarantee loan. That's it.
Correct.
Yes.
Them to anybody.
Right, right. So they add their guarantee, and again, you're still looking at, from a bank's perspective, it's not, oh, we just slap an SBA guarantee on a startup loan. If we wouldn't have done that loan anyways, we can't just, you know,
Do it.
anyways with the SBA.
Yeah. But y'all won't be more inclined to to extend loan through SBA because
Right.
they know if he default on it or something happened, then
It's partially covered. Yeah. Usually they're 50% guaranteed.
50%.
So some are, what's the higher amount?
Well, right now, well, it just ended. It was 90, but it's
Yeah.
is it 80 or 70.
75 or 80, somewhere around there. There's two types. But yeah, it is a way to sort of strengthen a loan. But it's not sort of a catch-all. It doesn't solve everything. And again, more paperwork, more fees. There's a chunk more that goes
Lot more
into
fees.
doing
Lot
an
more
SBA
fees.
loan.
Yeah.
Just to be aware of.
Does your branch facilitate SBA?
Yeah, we have SBA loans. Yeah, we certainly work with the SBA. There's a couple of different types is what I was thinking through, but the quick answer is yes.
Typically, like, what's the turnaround? Like, here is a longer process.
Yes, it's much longer. It depends on the volume there, to be honest with you. I'm working on one right now that's been since June, and we're not done yet. We should close later this month. They're really backed up. There were a lot of different programs. They had the 90% guarantee, which expired September 30th, and they waived all their fees if you're approved by then. So there was a lot of volume that came through, so they're really backed up right now. That bubble should well, you never know, but that should kind of clear out in the next month or two. But typically it's going to be a 60 to 90 day. I'd say it's a 90-day process if everything goes pretty smoothly.
Any other questions?
I got another question. You said something about Bank of Buffalo not being so black and white, right? So you use a lot of different criteria to determine whether someone can be financed. So if somebody got a nice time in business and they got strong income coming in based on their income statements, would that kind of would that help?
It plays a part. It's one of the things that we look at. Yeah, absolutely.
Yeah, I think it's about kind of telling the story. It's, if there's a story around it, our slogan, we're gonna try to find a way to say yes. If there is a way, if there's hey, we have a story behind this, we're gonna have to do it this way to get it done, that may be the case, but we're gonna try to find a way to say yes. And we try to avoid that black and white, hard yes, hard no, just,
We
sort
wanna
of
look at all of
formulaic.
it.
Yeah, we wanna know the whole story.
We want to know the whole story. It goes back to the relationship,
Or again, if it's, you may think, I want a business loan, I want to do this. Again, maybe there's a solution on the personal side, whether that's, a home equity or a car loan or any other piece. There could be a lot of solutions you may not be thinking of. So we try to look at the whole picture so we know all the options, not just, do I get a business loan, yes or no? That makes sense.
And it may be just down the road too. There's one that that I'm working on now, that initially it was no. It's a fairly strong business, but they had some rough years. They've come out of it well, and the bank wanted to get more comfortable. So I said, okay, let's wait until the end of the third quarter and see where the numbers are. If they are where we think they will be, then we'll be ready to go. So we had to wait on that one we stayed in communication for about 3.5 months.
So y'all want 2 years tax returns and everything?
Yep, and then year-to-date numbers.
Yeah.
It's funny, often a customer will come in and, I know 100 businesses that take cash, and it's a lot of cash business, and they'll be like, well, I made this much. And it's the misconception that that cash is gonna count as your income or your bottom line. If it's not on your tax return, we can't use it,
Right.
it's you save over here, but you're gonna lose on getting a loan on the other end, so
That
that's.
can be difficult as well, because sometimes, in business, my goal personally, I'm only speak for myself, is to try to save as much in taxes as possible. So you might see a large gross income, but then the net, after everything, expenses and all that, it changes. The lines changes, but how do
So
get around those?
as Annette said, you can't have it both ways.
can't.
So you can't have your cake and eat it too. You have to show that you can repay that loan, right? So if you net negative, there are some things you can add back, like depreciation from a bank side.
Yeah. It's not,
But
I had 2 stories on this. One guy who wanted a loan and gave me his returns and everything sounded great. I got this business that's making a ton of money. And on the returns, it shows the profit, same thing. He was making a bunch of money, but the profit was almost zero. And I said, well, I can't do a loan to you. You don't make any money. And he said, well, Tom, that's just a paper loss. That's not real. I said, well, I have to go on the paper because that's what I have to report to the regulators. So that was one where, again, my hands are tied. You know, I have to use what's on the return. It can't be, yes, I made this and some of these deductions are exaggerated or there was cash on the side. I can only use what's on the tax returns. I have another person that I worked with, a roofing company, who basically did that. For a while, we'll say he had a very good accountant. So his profit was very low. He paid very little in taxes. And he realized that he couldn't qualify for any loans year after year. And eventually he said, listen, I don't want to take every deduction. And if I do get paid in cash, I'm making sure that's reported and locked in. I'm putting it in the bank so I have it reportable so that I can show what I'm actually making. And then he came to me, and he did this on his own. He said, yeah, I used to have, again, no profit. Now I do for the last 2 years. And he had much better numbers. I gave him a pretty sizable loan, and he used that to grow the business substantially more.
And now he takes the cash out.
And to piggyback off of that, to piggyback off of that, though, it's important we said talk to your branch manager, your banker, talk to your accountant as well. Your accountant needs to know what your goals are over the next few years so that they can make sure that, you know, they're smart people too. They see businesses all the time. Just like us, they can give you good, sound, solid advice, and they should be. That's what you should use them for. But if you have future goals where you know that you need to have access to a line of credit, or you want to buy a building, or you want to expand your business, whatever you need to do, your accountant should be on board so that they can work to make sure that you will qualify, you know, when the time's right.
Yeah.
So in order to start establishing a relationship with the bank, we should come in and open a personal or just...
You should, I would say both. I mean, wherever you're doing your banking, you know, make an appointment with the branch manager, say, I'm gonna come in and talk to you, talk to him about your personal account, talk to him about your business, you know, tell him what your goals are, and keep your business there and work with them, check in with them. You know, when you go into the branch to do your deposits or whatever, make sure they know who you are and you know, talk to them about your business. They want to know, you know, that's their job. And they're putting those rules because they're interested in your business. What else we got?
I feel like we're talking to this side a lot. What do we have over here?
Any other questions? No? There's another one of our bank employees back there, Darnell Haywood. He's our community office manager. No. What's his title? What's your title, Darnell?
Community responsibility officer.
Community responsibility officer. Thank you.
And what do you do?
Darnell, what do you do at the bank? What do you do?
Wait, tell her. She wants to know what you do. We want to know too.
Yeah, we're all listening.
So my title of community responsibility officer, basically, I create and implement various community reinvestment goals for Buffalo as well as Niagara Falls. So as far as currently, we have a mortgage product that is out, as well as I reinvest different donations depending on different events going on, different not-for-profits where the bank can offer financial literacy, i.e. small business information here, as well as we are in the process of creating a small business product via 2022. So that will be something that will be coming out soon. But that's a gist of what I do. It's probably a lot more, but I just had a long day. Can't think of it, but that's about it right now.
Well, it's a nice surprise to see you here. Thank you for supporting, you know, us here. So, what other questions? Anybody have anything? Anybody want to add anything?
Is Bankable on Buffalo or local bank? Is this similar to like a credit union or like a?
Yeah, I can take that one. So we started locally, 5 years now? Full 5? 6 years. So we started here locally 6 years ago. But again, as Annette mentioned early on, we do have a parent company in Clearfield, Pennsylvania. So you can kind of think about them like our back office. And then we're the day-to-day. We do have, it's an all local team. We have local decision making. So when I'm going for a loan application, I'm talking to somebody locally that approves it. But then a majority of the back office functions are run out of Clearfield, Pennsylvania. And again, they're a larger bank. They're called CNB Bank.
CNB?
Yeah. And so we're a division of CNB. We're not like a separate subsidiary. That's kind of important, that we're a division of. So we're a part of, have access to all of their tools, all of their balance sheet. We're a full part of the bank, not a separate, part that they just kind of kick off.
They're about 3 hours south.
About 3 hours.
They only in PA?
Yeah. We have another division
Various
in,
parts of Pennsylvania, Philadelphia.
yeah, they're in the very rural.
Ohio.
You
Yeah.
keep driving and then you drive and then drive and drive.
There's not much on
There's
the way.
nothing there. When you just keep driving and you're going nowhere and you're like, where are they sending me? And then you're there.
Yeah.
In the middle of nowhere.
There's 2
really
stoplights, and that's Clearfield, Pennsylvania.
Okay.
One restaurant.
We have another division in Erie, Pennsylvania, called Erie Bank. One in Ohio called FC Bank. So we have a few different divisions that operate just like us. They have their own local team that they run, but again, they get that back office support from Clearfield, Pennsylvania, from CNB.
Great company. It's a relationship bank. I worked at another bank prior to coming to Bank on Buffalo, and the thing that I was at First Niagara Bank for most of my career, which I loved, because it was about relationships and it was about helping the community and helping your customers. And then it was sold, and then it was about, our bank was sold to another bank. And it was about numbers and how many did you get and what did you get today and did you get a credit card, did you get how many? And it was very stressful for me because now the agenda of myself wasn't on me, it was more on, or it wasn't on my customers, it was on me, what I needed to get versus what they needed to get. Mm-hmm. And Marty Griffith was the president at the time, called me up and said, Annette, if you come to Bank on Buffalo, we'll put a branch wherever you want it. So I literally got to go around driving the car with him, and I picked out a bunch of spots, and he's, all right, let me see what I can do. So I left where I was at, and I started Bank on Buffalo, and I took 7 of my employees that I had at my old bank, and I kind of cherry picked out of the 22 employees I had to come work with me, and got a great team. So it's just been a great experience, great customers and great partners. A lot of these folks worked with me at First Niagara Bank, so it's been a great experience. You're looking it up already. Any other questions before we finish up? No? Well, if no one has any other questions, oh, you're good. If no one has any other questions.
Last chance.
Going.
Do y'all have business cards?
Yep.
Yeah,
Yes.
I did bring some, yes. We'll leave them here on the table if anybody's interested.
So we do this every month. Next month, we're going to have an attorney here. His name is Matthew Pelkey. He's written a blog about the top 5 mistakes, legal mistakes that startups make. I think you're going to find that very interesting. He's an engaging guy. He's worked with startups his whole life. That's his specialty in his legal practice. The other thing he's good at, which we don't get a lot of activity in this incubator, is what kind of corporation you should form. Is it an LLC because you're going to run it your whole life, or is it a company you're going to sell someday, so you want to have a different corporate structure so that you can issue stock? So he can really give you good advice on how to start that corporation. When I was in Buffalo in the incubator, we had a lot of high growth, kind of like Navi's company. He's got a high growth potential company, so he might want to use a different kind of structure than just a simple LLC because he's going to sell stock in his company someday. But here, it's mostly Main Street businesses, people that are going to run the business their whole life. It's the way what they want to do. They're not going to get rich and famous and like Navi is, and but they still make. It seems like everybody makes the same 5 mistakes. At least Matthew tells us a pretty good story about that. So you don't want to miss that one. He's a good speaker. It'll be a one-man show, and you'll be able to ask him all kinds of questions like we were able to ask tonight. So that's on the 17th of November. So don't worry, you're a week ahead of Thanksgiving. You can come here and not worry. And hope to see you then. Thanks for coming, everybody.
Thank you.